Namaste, friends. Good morning. Today, since we completed two of the major topics, single entry and branch, the rest of the chapters are all comparatively very smaller topics compared to those two things. So, today we are taking up one of the smaller topics called departmental accounting. As usual, for the first page and the assignment you will do, I will provide you the solution. But one thing, today we are doing departmental. Today is a day dedicated for departmental accounting. May not be full day because it's a small topic. 3 hours of revision class followed by 2-3 hours of your working. You can put it on shelf and be sure that you know departmental accounting. So, we know what is a department. The difference between a branch and department is branch is an extended arm in a remote location. That is, it does the same operation but at a different place. Department, the location is the same but the operation is not the same. Okay, differential operation in the same location is known as department. Branch, same operation in a different location. Department, differential operation in the same location. Differential operation in the same location. Okay, intention of this topic is to measure the efficiency of each department. Okay, what is the intention of this topic? Because I want to measure the profitability, whether each department by itself is it making profits or not. Okay, intention of this topic is to measure the efficiency of each department and to ensure that unrealized profits, if any, are removed in the overall organization financial statements. So the intention is also, suppose if there are interdepartmental transfers at a loaded cost, then there is, and it has not been sold, it remains in stock. That means there is an unrealized profit which cannot be the organization's profit. So the first thing is efficiency of each department, whether each department by itself is a profit making department. That is a separate measure. That is, we call it popularly like MIS, Management Information System. That is more for the management than for an external party, though external parties are also interested, but more from the management perspective. Then comes the overall financial. I cannot just like that add all the departmental profit and say that this is organizational profit. There can be some unrealized items also which needs to be removed. So this is the intention of this particular topic. Okay, now coverage. What does this topic actually cover? Okay, from academic perspective, more importantly from examination perspective, where should I focus on this chapter? Okay, allocation of cost. That is one of the important things. For what are all the common costs, how these needs to be allocated to the each department. Okay, how it needs to be allocated to each department. As much as you study in your costing in various chapter, it is also applicable here. How I am going to allocate the revenue. That is one of our principal areas of study. The second area, managers commission, which is a very popular questionable area from the examination perspective. If we look into the past examination, this type of questions keeps repeating. So managers commission is one other question. Okay. The third aspect is removal of stock reserve. Okay, which we call it as unrealized profit, which we also call it as unrealized profit. Whenever I speak about removal of stock reserve, I also like to tell you that the stock reserve removal can be, okay, single level or multiple level. Okay, it can be only in one department or only one department's unrealized profit to be removed, or it can be the overall many departments, multiple level stock reserve, multiple level unrealized profit needs to be removed. That can also be one of the areas of questioning. Then this popular term called markup and markdown. Okay, for this I have already given in the classroom, and also I want to again stress it is nothing but adjustment account. With always adjustment
Loading
we
account.
have. Yeah, somebody asked me a doubt.
Sir,
Go ahead.
uh, under coverage means that the top is covered the department according, right, sir?
Coverage means in and out topic. What are all the topics we
Okay.
will be looking into department? What are all things in department can be a questionable area.
Okay, sir. Thank you.
Yeah. How are you, Ramji?
Fine, sir. How about you, sir?
God's grace, I'm doing good, doing fine. Okay, your place is becoming better now.
Sir?
Erode is the most affected in the initial days. Is it becoming better now?
Yeah, sir. Only 4 patients are in treatment, sir.
Oh, good, good. Please take care of yourself.
Thank you, sir. Sure.
Yeah. So markup and markdown, my dear friends, is nothing but adjustment account. With a term adjustment, we always say loading removal. There can also be a lesser loading. That is what is marked down. When we go there, I will again explain that theory once more so that you are more clear about. So departmental accounts has only these things to do. From the examination perspective, I'm boiling down to exam. Okay, so from the examination perspective, it cannot be a very different altogether. If you look at all these questions, it will be combination of removal of loading and computation of managerial commission. Loading as well as allocation of cost, it can be a combination of these things. We are not going to go ahead and do something extremely new and all in this. Okay, so and it is just the preparation of final accounts. You can prepare it department wise, whatever it is, it depends upon the question, and accordingly we will go. So please be confident that departmental accounts is not going to challenge you something which is absolutely new to you, which is not going to be absolutely new to you. Do not worry. Only thing is, always I have held this, be confident in your approach, you know how to go about it. Without wasting time, let us go to understanding departmental accounts. Okay, from the perspective, page number 1 is yours. Okay, and I start from allocation of cost question. Question number 1 in page number 2. Question number 1 in page number 2, my dear friends. Mr. Y. Mr. Y is the proprietor of a retail business which has 2 main departments which sell computers and printers. The following balances are extracted from the book: capital, sales, purchase, opening stock, salaries, advertising, discount allowed, drawings, building at cost, equipment at WDV, debtors and creditors, bank, rent and rates, canteen charges, heating and lighting, insurance of stock, general administrative expenses. Additional information: at 31/3/12/2017, the following amounts are outstanding: salaries of computers, printers, heating and lighting. Okay, the general administrative expenses and the rents and rates include prepayment of 33 and 80. Closing stock were 2,800 and 2,450. Depreciation to be provided on equipment on 10%. The managers of the computers and the printers department are to be paid a commission of 5% of net profit prior to the commission payment of the respective department, that is before computing such commission. In appropriation, the various expenses between the two departments, regard should be had to a number of worker, okay, average stock level, floor area. The general administrative expenses are primarily incurred in relation to processing of purchase and sales invoices. Prepare departmental trading profit and loss account and the balance sheet. Read through. Shall we? Okay, right. Vijay, if you are there, can you unmute? Okay. Yeah, Sai Lakshmi, can you unmute?
Yes, sir.
Yeah. Advertising, how will you divide?
On the basis of sales.
On the basis of sales. Discount allowed is given to you. If they are not given discount allowed, how will you do that? In this question, they have given. If they are not given discount allowed, how will you do that?
Debtors.
On the basis of on the basis of credit sales or debtors. Okay, fine with me. Okay. Rates, rent and rates, on what basis? Rent and rates.
No, sir.
Louder.
I'm not sure, sir.
Not sure? It should be on the basis of floor area. It should be on the basis of floor area. Canteen charge.
Okay.
Hello?
Yes, sir.
Yeah. Canteen charges should be on the basis of number of employees. Number of employees, canteen charges. Okay. Heating and lighting. Heating and lighting is again on the basis of floor area. Is again on the basis of floor area. Insurance on stock, average stock level. Insurance of stock, average stock level. And general administrative expenses, if you look at the last information, the general administrative expenses are primarily incurred in relation to processing of purchase and sales invoice. So it should be in the ratio of GP. It should be in the ratio of GP, because if it is exclusively sales invoice, in the ratio of sales. It is also for purchases, also for sales, means it should be in the ratio of GP. Okay. It is not hardware and electricals. Okay. It is computers and printers only. Computers, hardware. It should not have been electricals. It should have been printers. It should have been printers. Okay. And please remember, there are some outstanding. The following amounts were outstanding: salaries, heating and lighting, and the following are prepaid: general administrative and rent and rates, closing stock, depreciation. Finally, let us do manager's commission and do that. Okay. the balance sheet is always a singular aspect. Balance sheet will not be prepared department wise. Balance sheet is even in branch we have seen. Very rarely we prepare a branch balance sheet. Balance sheet will be for the organization as a whole, and it will be singular, not the plural, as like profit and loss, which can be for multiple things, So my dear friends, let's start the question. Let's start the question with trading profit and loss account. You need not wait for me. You can do it. You can do it. And what I am trying to do it is in the vertical format, so that it can be understood easily. I am trying to do it in the vertical format. You can do it in horizontal format also, drawing neat lines, or you can also join me in doing it in vertical format. I leave it to you. Okay. I leave it to you. However you want, you can work. I am working on vertical basis. If you are preparing on horizontal basis, each side have the basis also. Basically on the debit side have the basis. Okay, so that you are clearly, or within brackets we mention the basis. Okay, I completely leave it to you on preparation. I'm just, since it is Excel and since every question might have multiple departments, I am just doing it on vertical basis. Okay. Okay, friends, I'm starting the solution. Sales 59,000 and 29,500 less, okay, less cost of goods sold, opening stock, okay, is 2320, 2320 and 2136. Purchases 20,000, 10,000. Closing stock. The question itself has given the closing stock. Okay, 2,800 and 2,450. So I get the cost of goods sold. Okay, I get the cost of goods sold as okay. Gross profit will be my sales minus COGS. Sales minus COGS. Okay. Gross profit will be sales minus COGS. This is essential because Admin expenses are going to be divided on the basis of gross profit. Admin expenses are going to be divided on the basis of gross profit. Now I go to one by one the expenditure, my dear friends. We will remember that salaries has an element of outstanding. Okay, heating and lighting has an element of outstanding. General administrative and rent and rates has also some adjustment. Let's go from the top. Capital, sales, purchases, opening stock, salaries. Given directly to us. Okay. For computer department, 2560 plus 250. 2560 plus 250. For the printer department, 15440 plus 15440 plus 170. 15440 plus 170. So this is my salaries. This is my salaries. Okay, which is directly provided to me. Advertising, I'm going to divide it on the basis of sales. I'm going to divide it on the basis of sales. Total advertising expenditure is 615 into 59,000. Sorry. Into 59,000 divided by 59,000 plus 29,500. Are we getting 410 for computer department? Are we getting 410 for computer department? Okay, anybody? Can you? I hope you are following. Okay, I hope you are following. Advertising. Discount allowed. Okay, directly provided to us. Otherwise, I would have gone, as our friend says, either on credit sales or on debtors. 400, 200. Okay, drawings will not come here. Building will not come here. I'll come to depreciation as a last item, my dear friends. Bank will not come here. Rent and rates has a prepaid amount of 80. Okay, rent and rates less prepaid. Okay, so this will be on the basis of floor area. This will be on the basis of floor area. So 1580 minus 80, 1500 divided in the ratio of 2:1. Floor area 8,000, 4,000, 8:4 or 2:1. Yeah, 2:1. Okay, I hope the class is following. 1500 divided by 3 into 2 and 1500 minus 1000. How I got 1500 is after reducing the prepaid. Canteen charges does not have any adjustment and it will be on the basis of number of workers. 18 and 12 are the number of workers. 18 and 12 are the number of workers, which is 3:2. Which is 3:2. So canteen charges, number of workers. Okay. So I get a canteen charges of 875 divided by 5 into 3 and 875 minus 525, 350. So 525 and 350. Heating and lighting is again on floor area, nothing but 2:1. And please remember, there is an outstanding of 20. There is an outstanding of 20. Okay, heating and okay, plus outstanding. So it becomes 900. 900 divided by 3 into 2. Okay. Similarly, 900 minus 600. Okay. So 2 is to 1 ratio. Heating and lighting. Stock insurance is on the basis of average stock. Is on the basis of average stock. Average stock is 5,000 and 4,400. 50 is to 44. 50 is to 44, or okay, 25 is to 22, or 25 is to 22. I'll do 50 by 44 itself. 50 by 44 is itself. 940 into 50 divided by 94. Nothing but 50 is to 44. Okay. I get 500, and 940 minus 500. I get 440 for stock insurance. General administrative expenses less prepaid, okay, on the basis of gross profit. On the basis of gross profit, which is nothing but 39,840, 19,814, 39,840, 19,814. Okay, 59,294. Gross profit is the basis. Okay, the amount is 2073 minus 33. 2073 minus 33, making it 2040. Making it 2040. Okay, making it 2040. So 1358 and 682. 1358 and 682. Okay, depreciation on equipment, it's directly given for each department. It's directly given for each department. Okay, computers 18,000, 7,000, and the rate of depreciation is 10%. Rate of depreciation is 10%. Okay, so 18,000 into 10% and 7,000 into 10%. 18,000, 7,000, these are okay. Now if I total all expenses, okay, if I total all expenses, so that my departmental net profit, okay, my departmental net profit will be any doubt, please ask me.
The commission,
Did I miss out? Sorry, yeah, manager's commission, I missed out. Manager's commission. I'm doing a working note for ease of purposes. We all know the profit before commission. Rate of commission is the managers of computer and printer department are to be paid a commission of 5% of the net profit prior to commission payment. So before payment of commission, whatever is the net profit. If they have given 5% of net profit also, it is after charging such commission. But here they have given clearly before charging such commission. So it's a direct 5%. It's a direct 5%. So I'm getting 11,473 and 786 pence. 11,473 and 786. If you have a different answer, let me know. I hope the class understands. I hope the class understands the entire thing. I am going to balance sheet, which also I am preparing on vertical. Which also I am preparing vertically. Balance sheet as on 31st December 2017. Liabilities first. Okay, opening capital. Okay, the question itself has given the capital. Okay, 71,000. Okay, net profit of both departments. Okay, is nothing but net profit of both the departments, nothing but 11,473 plus 786, 12,259. Drawings less drawings, which is also as part of the question they have given, drawings 3,000. Okay, then creditors. The balance sheet has given, the trial balance has given it as 5319. Creditors 5319, my dear friends, 5319. Now comes outstanding expenses. In that salaries is okay, 250 plus 170. 250 plus 170. Heating and lighting will be 20. And remember, manager's commission is also outstanding to be paid only, and we can compute it only after computing the profit. So manager's commission of 604 plus 41 645 is also outstanding, is also an outstanding expenses. We move on to assets. We move on to
Sir?
assets. Sir,
Why we are including manager commission here, sir? The balance
because
sheet.
the question itself says the manager of the department are to be paid, not yet paid. If they have paid it, it would have come in the trial balance itself. Whenever there is an adjustment, the dual impact will be there. Manager commission is not yet paid, so it is outstanding. First, building. Building is, my dear friends, 43,000. Equipment, my dear friends, 18 plus 7, 18,000 plus 7,000 minus the depreciation of 1,800 and 700. 18,000 plus 7,000 minus the depreciation of 1,800 for that 18,000 and 700 for that 17,000. Okay, debtors 10,200. Debtors 10,200. Bank balance 5,600. Bank balance 5,600. Prepaid expenses which consist of prepaid expenses, admin 33, rent 18. Admin 33, rent and rates 18. Okay, then comes closing stock. Okay, closing stock, my dear friends, is 2450 plus 2,800. 2,800 plus 2450. Okay, closing stock is there. Okay. Eight to 663. Look through the solution.
Sir,
Go ahead with your question.
can you show the P&L account once, sir?
Sir, can we follow the same P&L account method for the exam, sir? Vertical format.
Yes, sir. Allowed, sir. Vertical is allowed, sir. It will make the presentation better, sir. Is the class clear? Any doubts, please ask me. Any doubts? Enna Ramji, clear arka?
Yes, sir, clear.
Na sir, clear arka? Okay. I hope whoever is there, it's clear to you. If you have a doubt, I believe that you will immediately unmute and ask me. Without wasting time, we are moving on. Question number 2. A Limited has two departments, P and Q. Department P sells goods to Department Q at normal selling price. From the following, prepare departmental trading P&L for the year ended and also the net profit to be included in the balance sheet. Opening stock, purchases, goods from Department P, wages, traveling expenses, closing stock at cost of the cost to the department, sales, okay, printing and stationery. The following expenses are incurred for both the departments were not apportioned between the department. Salaries, advertisement, general expenses, depreciation. The advertisement expenses of the department are to be apportioned in turnover ratio. Answer A kuttrukalam. Okay, don't we know that salaries and depreciation are to be apportioned in the ratio of 2:1 and 1:3 respectively. General expenses 3:1. 3:1. Read through the question, please. Okay, okay, okay. Saumi, are you there, Saumi? He's there and not there. That's the problem of this area. Okay, okay, Manasa, you are there, right?
Yes, sir.
Okay, can we quickly discuss the question, Manasa? Okay.
Yes, sir.
Right. A Limited has two departments, P and Q. Department P sells goods to Department Q at normal selling price. From the following, prepare what is going to be the difference between departmental profit and also ascertain the net profit to be included in balance sheet. What is going to be the difference?
The closing stock of Department Q will have the gross profit of Department P, sir.
Dot on answer, and that's it, my dear friends. The closing stock of Department Q, because it says Department P sells goods to Department Q at normal selling price. So the closing stock of Department Q is going to have some gross profit. Okay, some gross profit which Department A has, Department P has earned, and that needs to be removed. That needs to be removed. I will find, while finding out the departmental profit, no adjustment will be made. But when you are doing the organizational profit, I will make the adjustment. Okay, departmental profit, no adjustment. Only when I make the organizational profit, I will make the adjustment. The following expenses are incurred. Okay, quickly let us do the departmental trading P&L first, and then let's not worry about now organization as a whole. transfer to department Q is like a sale for department P. That is 8 lakhs. Okay. So here it will be the total income sales will be 38 lakh. Okay. Whereas here it will be 20 lakhs. The total sales will be 38 lakhs, 20 lakhs. Yes, cost of goods sold, opening stock, which is 5 lakh and nil, which means there is no opening stock reserve. Okay, 5 lakhs and nil. Purchases, $28 lakhs and 3 lakhs. 28 lakhs and 3 lakhs. Okay. Transfer from department B, that is nothing but purchases for me. Okay. That is nothing but purchases for me. For department Q, it is regarded as purchase. Wages 350 and 2 lakhs. Wages 3,50,000 and 2 lakhs. Closing stock, are 8 lakhs and 2 lakh 9,000. 8 lakh and 2 lakh 9,000. Okay, making the total cost of goods sold is this, and gross profit is going to be total sales minus total cost of goods sold. If you have a doubt, ask me.
Sir, will the wages be included here?
Yeah, wages is part of trading. Cost of goods sold is equal to opening stock plus purchases plus all direct expenses. All direct expenses should be included. Aspect of that. Going to the P&L aspect of it. Traveling expenses. Directly given. Direct. Okay. 20,000. 1,60,000. Okay. Printing and stationery. Somebody's mic is not in mute. Kindly mute it. Direct 50,000, 25,000. Yeah, go ahead.
Total sales on the transfer to Q include Panada.
38 lakhs.
Sir, can you please? Sir, can you please go up, sir?
Sales you have given 30 lakhs, sir. So
that
will it not
include transfer to the interdepartmental transfer? That sales is for external parties only.
Okay, sir.
Yes, Ramji, you are stuck somewhere. Can I help you?
No, sir. Correct, sir.
Shall I proceed? Ramji?
Yes, sir.
Yeah. Printing and stationery, 30,000, 25,000. Salaries, in what ratio I have to divide the salaries. The turn, okay. Salaries has to be divided in the ratio of 2:1. So, okay. Okay, salaries has to be divided in the ratio of 2:1. 3,30,000 is the total salary. Okay, salaries. Advertisement expenses has to be divided in the ratio of sales. Advertisement expenses has to be divided in the ratio of sales, nothing but 3:2. 3:2 in the ratio of sales, my dear friends. Okay, so it is 3:2. The total advertisement expenses 1,20,000 divided by 5 into 3. Okay, 1,20,000 minus 72,000. Advertisement expenses 3:2. General expenses. Okay, the question says it needs to be apportioned 3:1. 3:1. Okay, the total general expenses is 5 lakhs. The total general expenses is 5 lakhs. The total general expenses is 5 lakhs. Okay. Depreciation to be charged at 30% on machine value of 96,000 and to be apportioned 1:3 and to be apportioned 90. Okay. Okay. So depreciation 1:3 is the apportioning ratio. The amount is 96,000 into 30% divided by 4. 7,200. Again 96,000 into 30%. Okay, minus 7,200 gives me 21,600. Gives me 21,600. I think we are over with all the. I think we are over with all the apportionment of expenses. Okay, the total expenses. The total expenses, that is indirect cost, okay, of each department comes to this amount, giving you a net profit. Any doubt, please ask me. Any doubt, please ask me.
Sir,
Go ahead.
the sales ratio won't include the interdepartmental transfer, sir, the 8 lakhs. Sales ratio for advertisement.
No, will not include. Advertisement is only, why should I advertise to my own department? Advertisement is only for external parties, so it will not be 38:20, it will be only 32:20.
Okay, sir.
Okay. I hope you got this answer of net profit. Now I am going to find out organizational net profit. Okay. Total net profit. Okay, my dear friends, total net profit is this much. Okay, less stock reserve, nothing but unrealized profit on stock of department Q, on closing stock of department Q. Okay, okay, right? For some time you are going to listen. Sometime you are going to listen, not take it down now. Please listen. Okay, total closing stock. Okay, 2,09,000. We all know that the total closing stock of departmental Q is 2,09,000. This consists of, my dear friends, this consists of transfer from department P and also their own stock. Okay, are we clear? And also their own stock. Okay, right? Sorry. Okay. Total closing stock. Total direct expenses, my dear friends, I take your time in understanding, one time understanding, and we are through. Okay, these are all my direct expenses. My direct expenses is 13 lakhs. Okay, transfer from department P is 8 lakhs. So, therefore, stock of department P in total closing stock will be, my dear friends, 2,09,000 into 8 lakhs divided by 13 lakhs. $1,28,615. 1,28,615. Department P GP rate. Department P's GP rate. If I take Department P as GP's rate, okay, GP as a rate of sale, okay, Department P GP rate as on the sales, it will be 25%. 25%. Department P's GP rate is okay, is nothing but 25%, which we computed. Okay, 25%. Therefore, my dear friends, the unrealized profit will be 1,28,615 into 25%. Okay, 32,154. Okay, net profit of the organization. Net profit of the organization will be if you have a doubt, ask me. Patiently look through the working. I will run it through for you again. How I find out the closing? The total closing stock is 2,09,000. If suppose departmental Q does not have their own purchases or their own direct expenses. I'm again repeating. If department Q does not have their own purchases and their own direct expenses, all their closing stock belong to Department P. So 2,09,000 into 25%, simple. All the closing stock will belong to Department P, 2,09,000 into 25%. But Department P has their own purchases, their own direct cost of wages. So this 2,09,000 has to be split into two. How? What is their cost? What is transferred from the other department? How to split it? The most easy way is find out the total expenses on that. What is the purchase? My total direct cost. Okay, and that includes my purchases from one other department. So my closing stock will also be in the same ratio. My closing stock will also be in the same ratio in which I had locally purchased and got it from another department. Split it up. Okay, that's why what I found out is my total cost is my purchase of 2 lakhs, my interdepartmental purchase of 8 lakhs, my direct wages of 3 lakhs. Of that, my interdepartmental purchase is 8 lakhs. So 2,09,000. So on a proportionate basis, I am finding out what is the closing stock that belongs to Department P. How do I find out? 2,09,000 total closing stock into interdepartmental purchase divided by total stock. This will be my closing stock. Out of my closing stock, this will be what transferred from Department P, on which Department P has made a profit of 25%. So I remove that 25% and compute the net profit of the organization as a whole. Any doubt now? Ask me. If you are clear, please take it down. I hope all of us are able to understand this. I hope all of us are able to understand this. Okay, this is a simple calculation. Idukaga don't miss it out in the examination. It is very simple. Find out the what we popularly call it as proportion of goods transferred on the total stock. How to find out that proportion? My closing stock will consist of goods transferred plus all other direct expenses, which includes local purchases, otherwise purchases, and any expenses. So, if my total direct expenses is this much and my closing stock is the other half, what is the proportion of goods transferred from the previous department? Okay, it's a simple proportion that by which we have done like this many cases. Many cases you have done it in costing. In fact, very vaguely you will recollect that even in income tax we have done something like amount invested into LTCG divided by net consideration. Everything is a proportionate computation, and that's what we are also doing it here. So not something very new. Be confident, you will be able to do it. Never miss departmental question and all. Okay, it's all straight drives. Okay, you cannot miss it. Okay. I'm doing a question on managerial commission. What is the question on managerial commission? It's very simple. They would have paid the commission without taking off the loading. They would have paid the commission without removing loading. So what I will do is I will add back the commission which they have already paid, reduce the loading, and then repay the commission. Okay, this is one principle. Okay, this is one. Anjani, unmute yourself.
Yes, sir.
From which department will you remove the loading, Anjani?
From selling department.
from the transferring department. That's the answer. Thanks. Okay, from the transferring department you have to remove, because the unrealized profit is not in the hands of the purchaser but only in the hands of the seller. That is transfer on. Okay, so from the transferring department you will remove the loading. You have a doubt? From the transferring department you will be removing the loading so that you will be able to find out the correct profit. Okay, the managerial commission is to do with the, if it is manager's commission, we are very clear how to approach it. The manager's commission repeated, and manager's commission is the most repeated question in examination, most repeated. Okay, Department X sells goods to Department Y at a profit of 25% on cost. 1/4 on cost becomes 1/5 on sale. And Department Z at 10% profit on cost. Department Y sells goods to Department X and Z 15% and 20% on sales. Department Z 20% and 25% on cost. Departmental managers are entitled to 10% commission on net profit subject to unrealized profit being eliminated. Departmental profits after charging managers commission but before adjustment of unrealized profit are X, Y and Z. Stock lying in each department transferred from Department X, transferred from Department Y, transferred from Department Z. Find out the current departmental profit after charging managers commission. So this is a question of removal of stock reserve as well as finding out. This will be the most popular question. This will be the most popular. The numbers can change, the percentage can change, but the approach will not change. The approach will not change. The approach will remain constant. The approach will remain constant. To a larger extent, this involves more of logic than of accounts. We all know it involves more of logic. Okay, and in the classroom we have done sufficient questions. I am stopping the presentation now with the only intention that I want you to work out. I am also going to work out along with you. I don't have the answer. I'm also going to work out with you. After working out, both of us will check the answers. Okay, but I want you to work out and see, because I don't have number of questions in this. Only one question. The approach is going to be simple. So I'm stopping the presentation. Please work.
That's what 479 I said, sir.
Give me the answers.
Sir?
No, somebody I thought is giving the answers.
Yeah, Department X 32,400.
Okay.
Department Y 22,950.
Okay.
Department Z 16,200.
Okay. Department Y, how much?
22,950.
Okay. Friends, I'm getting this answer. Can you please check? I may also be wrong. I'm not denying that.
Sir, can you please tell me the commission for that department is it, sir?
Sir, it all started with, I'll tell you from the top. 362718 is after paying 10% commission. So this becomes 90%. This becomes 90%. So what will be the commission? Okay. 36 divided by 90 into 10, 4,000 would have been the commission, because this is after paying 10%. So it becomes 90%. So 4,000, 3,000, 2,000. In the same manner, I added that. I added that and got the profit before commission as 40, 30, 20. Got the profit before commission as 40, 30, 20. Now I am removing unrealized profit. Unrealized profit will be removed from the transferor department. From the transferor department. Department X would have sold to Department Y and Z. Okay. For Y, they have a stock of 15,000. For Z, 11,000. Transferred from Department X. When I look at it, Department X sells goods to Y at a profit of 1/4 on cost, which is 1/5 on sales. So 15,000 into 1/5 or 15,000 into 20%. 15,000 into 20%. Similarly, Department X has sold to Department Z at profit of 10% on cost. 1/10 on cost becomes 1/11 on sales. So 1/11, 11,000 into 1/11 makes it 1,000. These two are the unrealized profit of Department X. These two are the unrealized profit of Department X. Department ZX, okay, Department Y has sold for Department Z and X at the profit of, for Department Z, 20% on sales. There it is direct. So 12,000 into 20%. Similarly, 15,000 into 15%.
So that is 14,000 into 15%.
I'll complete it and then take up your doubt. This 1,000 should come, I believe, here. Department Z who have transferred to Department Y, okay, and Department Z at 1/4 and 1/5 of cost, which becomes 1/5 and 1/6 on sales. So 1,000. This is how I have got and then computed the commission. Now I am ready for your doubts.
Sir, transfer from Department Y to Department X, it is 14,000 into 15%, sir. You have done 15,000 into 15%.
Sorry, friend, I stand corrected. Sai, where did we go wrong?
So I did something like, so if the cost, I mean, the sales price, the selling price is 100 and it's been sold at a 10% profit. So the selling price is 110.
Yeah.
So the 10 rupees is like 10 by 110. I did something like that.
1/11.
I don't know, sir, where I went wrong.
You understood this?
Yes. The same mistake I also done, sir. 10 by 110.
Okay. Anjani, what did you go wrong?
Table தப்பா படிச்சிட்டேன் sir.
Okay.
Sir, whether the answer will differ from 10 by 110 or 90 by 100, you tell no, sir.
100% it will differ. So, I am repeating the answers, my dear friends. First, I computed the manager's commission. How did I compute the manager's commission? because the profit given is after paying a managerial commission of 10%, which means the present profit is 90. If 90% is 36,000, what is 10%? Similarly, I added for all the other departments. Then from the moving department, transferring department, I started removing. For department X, they would have transferred to Y and Z. Department Y would have started transferred to X and Z and X. Department Z would have transferred to X and Y. So like that, I found out the unrealized profit taking on cost on sales principle, and I found out profit after removal of loading, then paid the correct commission so that I get the correct net profit. A similar question appeared in your May 20 RTP. We'll come to that later. Okay. Removal of stock reserve. Removal means the same principles now on. Samudra and Co., a partnership firm, has 3 departments, namely KLM, which are under the charge of partner B, C and D respectively. The consolidated P&L: sales, closing stock, discount received, opening stock, purchases, salaries and wages, rent, selling expenses, discount allowed, depreciation, net profit. From the above account and the following additional information, prepare departmental P&L. The opening stock breakup department wise. Total purchase. Salaries include 12,000 wages paid to department M. The balance salary should be apportioned 4:4:1. Rent is to be apportioned in the ratio of 2:2:5. Selling and discount to be in the ratio of turnover. Depreciation on asset to be charged equally. Sales made by the 3 departments are 180, 130, 90. Breakup of closing stock. The closing stock of department M includes 5,700 goods transferred from department K. However, opening stock does not include any goods transferred. Department K and L sold goods worth 10,700 and 600 respectively to department M. Discount received are traceable to department K, L, M as 450, 400, 250 and 150. Partners are to share profit 75% of the respective department for the respective partner in charge, and balance in the ratio of 2:1:1. Okay, the question is we need to prepare the departmental profit and loss account. The departmental profit and loss account. Only the profit and loss account, no balance sheet and all. It is again apportionment of cost. It is again apportionment of cost. And finally, we can do a small working note for removal of loading. And finally, we can do a small working note for removal of loading. Okay, first let us do the departmental profit and loss account by apportionment of cost principle, okay, by the same manner in which we are so far doing. Okay, so up to departmental profit, finding out the individual department's profit, never worry about, my dear friends, never worry about the partner's share or unrealized profit. Let us first find out departmental. I wish that you don't look into my Excel working. You do it on your own. Later we will come back. but I'm not stopping the presentation here. I'm continuing.
Sir,
Go ahead.
இங்க total sales inter-department sales include பண்ணுங்க. Sir,
Yeah, I'm looking into it. Department sales made by 3 departments were 180, 130, 90. And ninth information says Department K and L sold goods 10,700 and 600 respectively to Department M.
Sir,
Raja?
I have small doubt, sir.
Raja?
Sir, do you want it?
Raja? Go ahead with your
Do
question.
you want it inter-department sales? Hello?
Yeah, I'm listening.
Inter-department sales எடுத்துக்கலாமா sir? Sir?
Repeat.
Total sales நம்ம inter-department sales நம்ம include பண்ணணுமா sir?
I'm just comprehending. Okay, I'm also just thinking. As she said, is it included or not included? Because in the P&L, I don't find anything as interdepartmental transfer. Okay, I don't find anything as interday. So that 4 lakhs, in my opinion, should include. In that 4 lakhs, in my opinion, should include that interdepartmental sales. Anjani, I also confirm you, but as of now, I'm doing it in this style. Suppose if it is a different the answer, I will send you the different answer.
Okay, sir.
As of now, I am following this style. Okay. I believe that it is included, but as you said there, they have only said note number 7. So which means they are only talking about the sales. So I'm just including and working.
Sir,
Go ahead.
sir, does turnover include both external and
Yeah.
the
Yes.
interdepartment?
Yes.
Sir, note 3 says wages include 12,000 of Department M. Should it come in trading account, sir?
No. Salaries and wages, so don't include it in trade. Don't include it in trade. And don't worry, nowhere gross profit is going to matter for us for Department M also. Don't worry.
Okay, sir.
selling expenses. This is where I thought I'll get the because they are very clear it should be in the ratio of sales. They have not, I mean, normally interdepartment sales will not have any selling or advertisement expenses, but since they are very clear, it needs to be in sales ratio, and they have given the sales ratio as 18 is to 13 is to 9. I'm taking in that ratio. I'm taking in that ratio. Okay. $67,060 is the net profit, which I am also getting. If you want to just see the total, okay, which we are also getting that same net profit of 67,060. This is the net profit of the organization as a whole before removing of loading. Before removal of loading, this is the net profit of the organization as a whole. I hope the class is also in the same level. Okay. Less unrealized profit. Okay. We have to remove it. Eighth information. Breakup of closing stock is 45,100, 22,300, 21,600. Department M includes goods transferred from Department K, 5,700. So for Department K, what is my GP percentile is what is important. Okay, what is my GP percentile is what is important. Okay, 46,510 divided by 1,80,000. 1,80,000 as a percentage, it approximately comes to 25%. It approximately comes to 25%. Okay, it comes to 26%. Sorry, it comes to 26%. It comes to approximately, my dear friends, 26%. 26%. So I'm removing the loading. Okay, 5,700 into 26 percentage. Okay, when I remove the loading, okay, profit after unrealized profit comes to, my dear friends, for Department K alone, okay, 19,758. 19,758. 19,758. Are we hitting at this answer? Any doubt?
Sir, can you please scroll down, sir?
Yeah, I can.
Sir,
Sir,
I'm listening. You can go ahead.
exactly 12,000 difference between L and M departments, sir. I don't know where I made a mistake.
12,000, probably you're not adding this or you put it in the wrong department.
I have posted in department L, sir.
Yeah, it should come to M.
sir,
Ask me the question, I'm listening.
loading வந்து general P&L ல தானே சார் ரிமூவ் பண்ணணும்?
Since I am not preparing a general P&L, okay, how did you do this previous question? We did not remove it from general P&L if you look at it. Normally, yeah, I agree with you, it should be removed from general P&L. Since it is only the departmental profits we have already identified. Okay, this loading, assume it to have been removed in the general P&L. From there, I'm not preparing something known as a general P&L. That's all I'm saying.
Yes. So, but in exam we can do it like that, right?
Yes. Not necessary. In these type of questions, the answer majorly stops here. This is just an additional step because here my profit tallies with my P&L account. From the above and the following additional, prepare departmental P&L account only.
Yes.
As additional step, you can do it and show to just add the mark, but the major answer stops here.
Okay, sir.
again, I'm doing something very additionally. Suppose in the examination they ask you, okay, distribution of profit to partners. Suppose in the examination they ask you particulars. Who are all the partners? Partners are as three defined under the chart. Partner B, C, and D. B, C, D. Okay. 75% of respective department. Okay. 75% of respective department. Okay. Balance profit in the ratio of, the question says balance profit, they are sharing the ratio of 2:1:1. 2:1:1. Let us find out balance profit, how much is there. Okay, 19,758 plus 24,230 plus 21,590 minus whatever has been distributed to them already, okay, will be my balance profit. Okay, balance profit is nothing but, okay, repeating, okay, 19,758 plus 24,230 plus 21,590 departmental profits minus whatever has been distributed to them is their balance profit. Okay, into 254 into 1/4.
Sir,
Raja,
sir,
I'm listening, Raja. I'm listening.
sir,
You can ask me the question.
sir, am I audible, sir? Can you, balance profit, what is written, sir?
Balance profit, how I
That
got
part.
it? The profit of individual departments,
Sir,
19,758.
balance profit. Sir.
Huh?
Yes, sir. Yes, sir. Yes, sir.
19,758, 24 to 30. That's not your question.
19,758.
Can you text me your question, my dear friend?
That's my sir. That's my question.
How I derived, Hazar, how I derived that balance profit, I cannot understand, sir. That's what I am saying, my dear friend. Okay, how I got the balance profit is like this. The total profit is 19,758 plus 24,230 plus 21,590. This is my total profit. Of that, 75% is distributed already to the partners. 75% is already distributed. So 25% of each department, which is what is the balance profit. 25% of each department is what is known as the balance profit. I hope I'm clear to you. Okay, it is just
that 25% of which amount? So 1978, sir.
Plus 24 to 30 plus 20. You one department do for 3 departments. These are all the 3 things, 3 departments. Each department will have 75% distributed to the respective partner, 25% common share. This is an add-on answer. Again, only if asked for, you need to work it out. This question I worked out and showed. Okay. Being over smart is also not encouraged in examination. Only asked for, you need to answer this.
So can you please show me that
Sure.
balance profit first?
Okay. I'm going into the 5th question. The following information provided by Shobha Departmental Stores for the year ended. Department X, purchased unit, sales unit, closing stock. Similarly, Department Y, Department Z. The total value of purchase is 15 lakhs. It is observed that the rate of gross profit is the same for in each department. You are required to prepare departmental trading account. Read through. Taking over. Okay. Can somebody tell me how do we work this type of questions? Can somebody tell me how do we work these type of questions?
So I think for COGS, cost of goods sold equal to purchases plus opening stock.
Cost of goods sold is?
Opening stock plus purchases minus closing stock.
Okay. Yeah, that is always there. But these type of questions can have only one style to find out what is GP. Only one style to find out. It is observed that the rate of gross profit is the same in each department. We have the selling price per unit, per department. We have the total purchase cost. So it all goes by the concept. If all the units purchased are only sold, if all the units that are purchased are sold, what will be my GP? And that ends the answer. Repeating. These type of questions, if they appear, there is only one assumption on which we go. Don't look at selling unit. If these 2,500 units are sold for 160, If these 5,000 units are sold at 180, if these 6,000 units are sold at 200, I know my sale value, less I know my purchase value will get me my gross profit, assuming zero opening stock, zero close. So percentage of GP will be known. From there, the question becomes all the more simpler. So all these type of questions, never miss again. All these type of questions, only one fundamental assumption by which we start our working. Question number 5. Number 6. Okay. Working note number 1. If all the units that are purchased are sold, what happens? Okay. So Department X, I purchased the 2,500 units. Department X, 2,500 units. Okay, at rupees 160 per unit. 160 per unit. So Department X will be, my dear friends, 2,500 into 160 per unit. Department Y, how many units purchased? Okay, 5,000 units and they are sold at 180. 5,000 units at rupees 180 per unit. Okay, so 5,000 into 180 and Department Z, okay, it says 6,000 units at 200. 6,000 units are purchased and they will be sold at 200 per unit. Okay, 6,000 into 200. So the sum total of my sales will be 25 lakhs less purchase cost. We all know what is the purchase cost. Okay, is 15 lakhs. Okay, therefore gross profit, the gross profit will be, okay, 10 lakhs. Okay, DP as a percentage of sale will be 10 lakhs divided by 25 lakhs as a percentage, 40% across all groups. Across all groups. Any doubt in this, ask me. All these type of questions start with a fundamental assumption that, let us say, zero closing stock, zero opening stock. I know the selling price of per unit, but I don't know the purchase price of per unit, but I know the total purchase cost, and I also know that GP is constant across units. So what I did, whatever I purchased, if I sell, what I will get. Whatever purchased, if I sell, what I will get? I will get 44 lakhs, 9 lakhs and 12 lakhs as sale value. And my purchase value is 15 lakhs. So that I end up in making a GP of 10 lakhs, which is 40%. Any doubt?
Sir, but the question has given us some closing values and also.
Yeah. I'm not denying that. Closing values, closing units. I am only finding out the GP, my dear friend. I am nowhere denying this information. I'm nowhere denying this information. I'm only saying that this will be my GP. Is that correct?
So this is correct.
Yeah. If all the units purchased are sold, this will be my GP. Okay. Working note number 2. Okay. Opening stock. How many? Okay, in units. how many units will be there in opening stock? Because I purchased the 2000 for X. I purchased the 2500 units. I have a closing stock of 250, but I sold the 2550 units. What will be my opening stock? What will be my opening stock? If I say that it is sales plus closing stocks, in units I am saying sales plus closing stock minus purchases, is my answer clear to you? Is my answer clear to you? Okay, sales. Okay, opening stock in units for department X. Okay, it will be sale. I sold 2550 units. I have 250 units on hand in the end, and I have purchased only 2500, 300 units. For department Y, for department Y, my dear friends, for department Y, I sold 4,800 units. I sold 4,800 units, and I have a closing stock of 400 units. I purchased during the year 5,000, so 200. For department Z, for department Z, 6,240 plus 6,240 plus 140 minus 6,000. These are my opening stock in unit. Any doubt in this? Any doubt in this? I hope the class is clear. Okay. Working note number 3. Purchase price. If I find out, I can find out my opening stock, purchases, closing stock. Department X. Okay. Right. What is the selling price? What is the GP? What will be the cost? Nothing but purchase price. Okay. My selling price, my department X selling price is 160. 160. 40% is my GP. 40% is my GP. So 60% becomes my cost. 60% becomes my cost. Department Y, my selling price is 180. Again, 40% is my GP and 60% becomes my cost. Department Z, okay. Okay, 200 is my selling price. Okay, so my cost will be 60%. Any doubt in this? Okay, cost is nothing but sales minus GP, which is going to be my purchase price. Which is going to be my purchase price, because that's how I found out my GP itself. That's how I found out my GP itself. 96, 108 and 120. 96, 108 and 120. Now I will prepare my departmental trading P&L account. Now I am coming to my main answer. Departmental trading account only, not P&L. Departmental trading account. Particulars, department X, department Y, department Z. Particulars, department X, Y, Z. Okay, sales. They themselves has given 2,550 into 160. 2,550 into 160. Okay, 4,800 into 180 and 6,240 into 200. 6,240 into 200. This is my sales. Less cost of goods sold. Okay, opening stock. I know my opening stock and I know my purchase cost price into 96. For department X, 300 units into 96. For department Y, 200 units into 108. For department Z, it will be 380 units into 120. Okay, and then comes purchases. I know how many units I have purchased. 2,500, 5,000, 6,000. 2,500 into purchase cost. 5,000 into purchase cost. And 6,000 into purchase cost. Okay, then I know what is the closing stock. Closing stock is again 250, 400, 140. 250 into purchase cost. 400 into purchase cost, because it should be valued at cost, we all know. 140 into purchase cost. Okay, so I get a gross profit, or in fact total cost of goods sold, this is my total cost of goods sold, leaving me with a gross profit of, any doubt, ask me. Okay, the whole, if these type of question appear, working note number 1 is the critical working note, where we assume only one thing: if the units purchased are sold, so that I will get my GP, and GP is going to be constant across unit. From there on, it is only identifying the cost and doing the question. The critical working note is working note number 1, where we go by the fundamental assumption that if all the units purchased are only getting sold, how this works. Any doubt? I hope the class is clear. Before going into the next question, I am once again teaching you the theory of markup and markdown. Okay, I am once again looking into the theory of markup and markdown. My dear friends, once again I am looking into the theory of markup and markdown. What is that? If cost is 100 and profit is 50% of cost, then we call it as markup being 50 and therefore selling price or even the transfer price 150. If cost is equal to 100, profit I want 50% of cost. The new name I give for that is markup. Markup should be 50% of cost. So my markup will be 1 by 2 on cost or 1 by 3 on sales, whatever it is, 50 rupees. So that my selling price will be 150. Markup is increase or the loading on the cost. Okay. So in the stock account, okay, recorded at markup price. That is, I will record it at 150, my dear friends. In the stock account, I will record it at 150. Suppose this stock is not sold, in the closing stock, I will remove the loading of 50 in my markup account. In the closing stock, I will remove the loading of 50 in my markup account. As a ledger, if you can imagine, purchases 150 in the stock account because it is at loaded price and it is not sold. So closing stock 150. In the markup account, two stock reserve, or that is on the two close stock, 50 rupees will appear to offset this particular aspect. So I hope you are clear that markup is increase in the cost and that will be the parallel effect will be given to that in the markup account. Suppose if these goods are sold at 130 or supposed to be sold at rupees 150, actually 130, okay, actually they are sold at 130 or supposed to be sold at 130. Then comes the concept of markdown. Then comes a markdown, na loss kadayadu. Markdown does not mean that you are making loss. Markdown just means that you will not get the normal selling price. What is my normal selling price? My normal selling price is 150. Thinking that I will get 150, I have passed the entry. Thinking that I will get 150, I have passed the entry. But now only I realize that I will only get 130 and not 150. So comes the concept of mark down by 20 rupees. Mark down by, why marking down? Because thinking that I will get 150, I have passed the entry already for 150 rupees. Now I am only going to get 130 rupees. So there is going to be a reduction in my selling price, which we call it as markdown. So what am I trying to nail it into your mind? Two things I am trying to nail it into you. Markdown na loss kadayadu. Markdown does not mean there is a loss. Markdown means reduction in the profit. That's all. Markdown does not mean only if I sell it at a price lesser than 100 loss. I'm still selling it for 130, which means I'm making a profit of 30 rupees. But I thought I will make a profit of 50. So that is known as expectation reduction is known as markdown. Do you understand? Reduction in the expected profit is known as markdown. Right. Let me come back. This is the first thing I ask you to remember. Markdown does not mean loss. Second thing I ask you to remember. First, I will record it at the normal market price. Normal market price. And I have always held On any day, even if you wake me up at midnight, I will tell you accountancy is after all to do with the debits and credits, nothing else. Okay. So when I have debited, for example, in my stock account, I have debited 150. Now I know that I will not get that 150. I am going to get only 130. 20 rupees, how will I do? I will erase 150 and write 130. Yeah, not possible. That 150 is already recorded. So the way to reduce a debit is to make a credit, is to enter something on the credit side. So I put by markdown 20. And in my markup account, to mark down 20. As simple as this. As simple as this. So, first I will record it at markup price. Later, if I know that it has to be marked down, I pass a credit entry. I don't change this. I don't erase this. And this is for opening stock. This is for closing stock. This is for purchases. For everything. And markup need not be the same for all departments. Markup need not be the same for all departments. One department might have higher markup, another department might have lower markup. That is management's decision. As an accountant, we are supposed to record the transaction, whatever the management feels as markup and markdown, let them. Okay? Okay? Is the concept clear? Any explanation you want, please ask me. Markup, markdown. Okay? Markup means increase in the selling price, which we call it as invoice price, which we call it as branch adjustment, which we call it as loading, which we call it as unrealized profit. Jargons. Jargons. Just the jargons. Give it any name, it is increase in the cost. Suppose I am unable to, and normally that should be the IP and SP will be the same. Suppose SP is lesser than IP, then I reduce it by crediting it. This is all, my dear friends, nothing else, nothing else. And it is absolutely simple, straightforward. Shyam Udyog, a retail store, has two departments, Department X and Department Y, for which stock account and memorandum markup account are kept. All the goods supplied to each department are debited to stock account at cost plus markup, which together make up the selling price of the goods, and in the account sale, the sale profits of the goods are credited. The amount of markup is credited to departmental markup account. If the selling price of any goods is reduced below the normal selling price, the reduction markdown is adjusted both in stock account and markup account. The rate of markup A for Department X is 1/3, Department Y is 1/2 of cost. The following are the figures: opening stock, purchases, sales. Stock of Department X at the opening includes goods the selling price of which had been marked down by 37,800. These goods were sold during at the reduced price. Certain stock of the value of 2,07,000 purchased from Department X was later transferred to Department Y and sold for 3,10,500. The last zero is wrong. It is only 3,10,500. It is only 3,10,500. As a result, though cost of the goods is included in the Department X, the sale profits have been credited to Department Y. Okay. During the year, to promote, they have marked down like this: Department X, Department Y. All the goods marked down were sold except Department Y of the value of 150, marked down by 30,000. At the time of stock taking on 31st March, it was discovered that 11,700 worth of goods has been lost. You are required to prepare for both the departments, memorandum markup account and stock account. read through. A similar question we have done with a different number. That's all. Shall I, friends? Shall I, friends? Just give me a minute. Just give me a minute. I'll be back. Just need to make it as a proper ledger account. So it will be in the sheet 3 of the answer, my dear friends. When I post the answer in the drive, look for sheet C3 for this particular question. Okay, question number 6. Question number 6 in page number 6. Department stock account. Proper ledger account, my dear friends. Department X and Y. Stock account, markup account, particulars, department X, Y on both sides. Opening stock. Okay. The stock as on 1st April at cost. But we need to record in the stock account at cost plus markup. Okay. Always branch accounts where we have seen that stock will be at IP. Okay. So 3,15,000 plus 1/3 of 3,15,000. Okay. 3,15,000 plus 1/3 of 3,15,000. 4,20,000 and 558, 5,58,000 plus 5,58,000 divided by 2 because 1/2. The markup of department Z is 50, with department Y is 50% of cost. 50% of cost. Okay. This is the opening stock. Okay. So opening markup will be balance brought down will be 4,20,000 divided by 4. Correct? 1/3 on cost. 1/3 on cost will be 1/4 on invoice price. Similarly, this divided by 3. 1 by 2 on cost will be, okay, 1 by 3. So opening will be 420 and 837 in the stock account, whereas in the markup account on the credit side, 1,05,000, that is 315. Difference between 420 and 315. 837 and 558. That's what I have written. Information number 1 says, stock of Department X on the 1st April included goods the selling price of which has been marked down by 37,800. Balance brought down, okay, of Department X 37,800. I cannot reduce 420 minus 37,800. I should not do. If I want to reduce a debit, it has to be credited. Similarly, balance brought down, okay, 37,800. Now comes purchases. Similar fashion, 2277, 22,77,000 plus 1/3 of 22,77,000. Similarly, 28,02,000 plus 28,02,000 divided by 2. Okay. Here, okay, purchases, okay, this divided by 4 and this divided by 3. 1 by 3, so here it becomes 1 by 4. 1 by 2 of course, so here it becomes 1 by 3. I hope the class is following. I don't hope the class is following. Purchases is over. Sales.
Sir,
Raja?
the balance B by D 37,800 இருக்குங்க சார்.
ஆமாம்.
அந்த மார்க்கப்ல அதே அமௌண்ட் எப்படி சார் என்ட்ரி பண்ண முடியும்?
ஏன்னா I will read the accounting policy. All the goods supplied to each department are debited to stock account at cost plus markup, which together becomes the selling price, and the account sale proceeds are credited. The amount of markup is credited to markup. If the selling price of any goods is reduced below the normal selling price, the reduction, which is known as markdown, is adjusted both in stock account and markup account. So stock account liye adjust பண்ணுவேன், markup account liye adjust பண்ணுவேன்.
Okay.
Yeah. Sales. Okay, 2868, 28,68,000 and 37,50,000. 37,50,000. Sales 28,68,000 and 37,50,000. Okay, right? So that's over. Information 1 is over. Certain stock of the value of 2,07,000 purchased for Department X was transferred to Department Y and sold for 3,10,500. Okay, the transfer has not been recorded, my dear friends. The transfer has not been recorded. Transfer to Department Y. How much is the value? 2,07,000, and I know the markup of 2,07,000, okay, plus 2,07,000 divided by 3. So 2,76,000. Here transfer from Department X will be 2,07,000 plus 2,07,000 divided by 2, because the markups are different. The markups are, இது எப்படி Now, branch to branch transfer, what we will do, as if the branch returned to head office sends it to another branch. Similarly, department Y, department X will send it back to head office at their markup price, and the head office will supply to department Z at their markup price. So it is not that transfer will not be of same value because markup is not the same. If the markup is the same, it will be of same value. So we should assume while X2 it went to head office, from head office it went to department 1. Transfer from department X, 3,10,500 divided by 3, and transfer to department X, okay, 2,76,000 divided by 3. Okay, I hope the class is following. Okay, information 2 is over. During the year 15-16, to promote the goods, they were marked down as follows: 10,800, 60,000. Directly marked down 10,800 and 60,000 or 60,000. 10,800 and 60,000. 10,800 and 60,000 marked down. 10,800, 60,000 marked down. 10,800 and 60,000. I'll come to the bottom information later. At the time of stock taking, it was discovered that cloth of department X at the cost of 11,700 was missing. Abnormal loss. $11,700 plus 11,700 divided by 3. Okay, it's cost of 11,700. Abnormal loss will be 15,600 divided by 4. Okay, 3,900. Is the class so far clear? Any doubt, please ask me.
Sir,
Go ahead.
in markup account, transfer to department X is 69,000, sir.
Yeah, thanks. Thanks. Okay. Is it so far clear to all of us? I believe that all of us are following this. Okay. So this is over. Now the bottom information. All the goods marked down were sold except for department Y. The value of 150 marked down by 30. They have themselves given. Otherwise, if they have given 150, we would have found out what? For 3 lakhs, it is 60,000. For 150, what? We would have found out. But they themselves has given that it is 30,000, which makes the question all the more very, very simple. All the more very, very simple. Okay. Balance carried forward, that is marked down, okay, of department Y, 30,000. Okay, here also.
Sir,
Raja?
if they're not given, we want to find out, sir.
Yeah, I'll tell you how. I'll tell you again how we will find out. Okay, suppose if all the goods of markdown were sold except department Y of the value of 150. If they have stopped there. If they have stopped there, how will we find? For 3 lakh, markup is 60,000. Markdown is 60,000. For 1,50,000, what? Repeating. If the question has stopped with the word, all the goods marked down were sold except of department Y of the value of 150, how we would have found it out? For 3 lakh, mark down is 60,000. For 150 watt, we would have hit a answer of
30,000.
30,000. We would have hit a answer of 30,000. Here they themselves has given. That's all, Raj. Okay. Now I will find out the balance carried forward. That is the closing stock. Is this clear, my dear friends? Just a minute. Just a minute. Ask me your doubts now. Okay. Markup, markdown account, it's just adjustment account. Okay. Because this will get you 6 to 8 marks. This will get you 6 to 8 marks, and we should not miss it. We should not at any cost miss it. I hope the class is clear. I hope the class is clear about markup, markdown also. Okay. Two things are, one, what I forgot is Ramji told me that after some time we need a small break because our mobiles are getting heated. Okay. I forgot that in this entire process. Okay. Sorry, Ramji. Next class onwards, you can ping me. I will just check and let you definitely give you the break.
Sir, even I also get merged with departmental accounts, so I also forgot it, sir.
That's I'm very happy of that wordings. I'm very happy of that wordings. Okay, so kindly bear with that. We will. Okay, and the second thing is, okay, the last question of my working is what we have worked out in our classroom. That is question number 7, which is removal of stock reserve at multiple levels. at multiple levels, removal of stock reserve. Okay. FGH Limited has 3 departments, I, J, K. The following information is provided for the year ended. Opening stock reserve, material consumed, direct labor, closing stock, sales, area occupied, number of employees. Stock of each department or cost to the department concerned. Stock of I are transferred to J at cost plus 20% and J to K at 20% on sales. Other common expenses are salaries and wages, rent. Prepare departmental trading profit and loss account for the year ended. Okay. Shall I work it out again? What friends, can we work it out again? I hope all of you are there.
Sir, is there any major changes from the previous question, sir?
It is the same question. I just copied the same question.
Only numbers are changed, right, sir?
No, not even numbers. I have copied the same question. Not even numbers I have changed. I have copied the same question. But give me 20 minutes. We'll complete this question also so that we'll get a satisfaction that all things are done. Okay. We'll do it. 20 minutes we will complete it. That I will end the day with a good satisfaction that at least we have done all the questions. Those are rare question, but let us understand this. Okay. Sales is only said in department K, 80,000. Fine. Transfer from previous department. Transferred to next department. We will wait for that. Less cost of goods sold. Opening stock. Okay. 5,000, 8,000, 19,000. 5,000, 8,000, 19,000. Purchases. Okay. Purchases or material consumed 1620. Material consumed 16,000, 20,000. Material consumed. Direct labor 9,000, 10,000. Direct labor 9,000, 10,000. Direct labor 9,000, 10,000. Closing stock minus 5,000 minus 20,000 minus 5,000. Then transferred from previous department. That I don't know. Now total cost of goods sold. First I will do for department I. Department I, 25,000 worth of goods they have to transfer it to department J. 25,000 worth of goods they have to transfer it to department J. The gross profit will be nothing but sale or transfer minus, okay, as of now 25,000 they have to transfer. The question stays, transfer stocks of I are transferred to J at cost plus 20%. So nothing but cost is, my cost is 25,000 plus 25,000 into 20%. Okay. So I am transferring it for 30,000. So this department receives the goods for 30,000. This department receives the goods for 30,000. Repeating, my dear friends, for your understanding, repeating for your understanding again, 25,000 is the cost of goods sold. Opening stock plus purchases plus direct expenses minus closing stock. My cost of goods sold is 25,000 and I am transferring it to the other department at 20% above cost, okay, on cost 20%. So I am transferring it for 30,000. I get a GP of 5,000. My department gets a GP of, that is department I. Now my cost of goods sold of department J is 48,000. Department J transfers 1/5 on sales, which is 1/4 on cost. Department J transfers goods at 1/5 on sales, which is 1/4 on cost. So here it will be 48,000 plus 48,000 divided by 4. Okay, 60,000. 60,000, making the GP at 12,000.
12,000.
12,000. So here it will be my cost. And 6,000. So the GPs are 5,000, 12,000, 6,000. The GPs are 5,000, 12,000, 6,000. Department I transfers to department J, cost plus 20%. Department J, it is 1/5 on GP, so 1/4 on cost. So I got 12,000 the profit, and department K sells it to general public 6,000. Sells it to customers 6,000. This is my gross profit. Now I'm looking into other expenses. Okay, it says other common expenses are salaries and staff welfare, which I will allocate on the basis of employees. Salaries and staff welfare. Okay, my dear friends, here I am writing employees. Okay, on the basis of number of employees, the total is 18,000. 33:2:1. Okay, 18,000 divided by 6 into 3. 18,000 divided by 6 into 2. 18,000 into 1 by 6. Okay, this is staff welfare, and then comes rent. Okay, which is bifurcated on floor area. 25:15:10. 5:3:2. 5:3:2. This is on the basis of floor area. Okay, and 5:3:2, the total rent comes to 6,000. 6,000 into 5/10. 6,000 into 3 by 10. 6,000 into 2 by 10. Now I am hitting at departmental net profit. I am getting at departmental net profit. Okay, nothing but or loss. Okay. 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 So we are getting loss of department I 7,000, profit of department J 4,200 and profit of department Z 1,800. 1,800. Okay. Now I am going into the next working. Okay, which is okay organizational net profit, which is organizational net profit. Net profit from department. Okay, from department I got 1,800 plus 4,200 and minus 7,000. Okay, I got 1,000 as loss. Opening stock reserve. Opening stock reserve given in the question itself. Opening stock reserve 2,000 plus 3,000, 5,000. Okay, less closing stock reserve. Less closing stock reserve is what I am going to find out. Is what I am going to find out. I am going for a working note for this purpose. Working note for closing stock reserve. Okay. In department IJK, in department K, the closing stock, my dear friends, in department K is 5,000 and we all understand it is fully transferred from J because department K has no material, no labor, nothing. The entire 5,000 is transferred from J. Okay, okay, right, right. J makes a profit of 20% on sales. So 5,000 into 20% is 1,000. Okay, this we will keep it highlighted. This we will keep it highlighted in department K. J's profit is 1,000. I'm leaving a couple of lines. Please leave couple of lines. Please leave couple of times. 3-4 lines also you leave it. Okay. In department J, we need to find out what is I's stock proportion. Like the one question which we did already. The stock proportion we need to find out. How to find out? Total direct cost of department J ignoring opening stock. Why I am ignoring opening stock? Because for opening stock I have already prepared my stock reserve. So total direct cost, okay, of department, okay, will be 20 plus 30, sorry, 20 plus 10 plus 30. Total direct cost, okay, ignoring opening stock is 60,000. Stock transferred from department I is 30,000. So proportion is 1:2. proportion is 1:2. That is, my total closing stock is 60,000, out of which 30,000 I got it from the previous department. So, for every 2 rupees I spent, 1 rupee I have spent only for my previous department. 1:2. Okay. Closing stock of J is 20,000. Closing stock of J is 20,000. Proportion belonging to I is 20,000 into 1/2. Okay, 1/2, 10,000. Therefore, I would have made a profit of, okay, 10,000 into, my dear friends, I's profit is transfer cost plus 1/5 on cost, so 1/6, that is 1667. Okay, this is the profit of I. Again, I highlighted. So when I come here, in department K, the closing stock is 5,000. J would have made a profit of 20% on sales. If the profit is reduced, J stock value will be 5,000 minus 1,000, 4,000. Okay. Therefore, I would have made a profit of 4,000. Okay. Into 1/2 is equal to round 4,000 into 1/2. 1/2 is the stock, into 1/6. That is the profit they would have made. 333. So the total stock reserve at the closing will be 1,000 plus 333 plus 1667. That is 3,000. My dear friends, repeating. There are 3 stock reserves. Stock reserve number 1 is simple. Stock of J consists of a proportion of goods from I. How did I find the proportion? Total direct cost divided by the goods transferred from I. Okay. So for every 2 rupees, 1 rupee belongs to I. So if my closing stock is 20,000, 10,000 belongs to I. On that, I has made a profit of 1/5 on cost, so 1/6 on sale, 1667, simple. K becomes the total closing stock of K belongs to J, on which J has made a profit of 1/5 on sale, simple. So if I reduce the profit, I get something known as cost of J. When I get the cost of J, again I do the same, proportion into profit. I get a closing stock reserve of 3,000. I get a closing stock reserve of 3,000. So I go to the net profit of the organization. I can tell you only one thing. The same question will only repeat with probably a different number. That's all. Not too very rare. Almost the same question only repeats in this.
Sir,
Yeah.
can you please sum up the last closing stock reserve points?
Yeah, I can.
Yes,
I can sum you up. Okay, I'll make it more detailed if you want. Okay. I'll make it more detailed. Closing stock of department A is 5,000. Profit made by department J is, because the entire closing stock belongs to the 20%. Therefore, cost to department J, if you subtract, always sales minus GP is equal to cost. This is the cost to department J. This is the cost to department J, 4,000. Cost of department J will always include cost of transfer from department I. The proportion is 1:2. Therefore, on this, my dear friends, 4,000, 1/2 belongs to I. I would have made a profit of 1/6 on this. So, that is what it is.
Yes, sir. No, it was close. Closing stock.
Friends, majority of the time your question is going to be on manager's commission. If it is allocation of cost also, but never, I'm not predetermined. Whatever may be the type, the answer is going to be very simple. 75 to 80% of the question, you will not do any mistake. If at all there is a twist, just concentrate. You will be making it. Okay? By working out the assignment today itself, by working out the assignment, you will be through with departments. Please work out the assignment today itself. No question of any delaying. Today we will close department. 1 minute, my dear friends. Thank you.